Good day. UGE develops, owns, and operates solar and battery energy storage systems projects in the US. We've got CEO Nick Blitterswyk of UGE International joining us today. UGE just released its Q3 financial results, and Nick is here to give us a rundown on the quarter and the coming outlook for UGE and its renewable power projects. I'm Martin Gagel with Market Radius Research. It's Friday, December the 1st. Please remember this is neither recommendation nor investment advice. Nick, thank you very much for joining us today. The quarter seemed to have mixed results and reflect what I think is the last of the company's strategic shift from an EPC to just a power generation company. Can you give us some highlights on the quarter and detail exactly what was going on this quarter?
Yeah, good morning, Martin, and great to see you as always. And I think that's probably pretty well contextualized in terms of both the mixed quarter and also that transition from the prior one-time revenue business that we were. As a quick reminder, we used to, in essence, sell all of our projects or build those projects for other owners. And over the last few years, we pivoted to the IPP model of building up our operating portfolio. From an income statement perspective, one tricky aspect is that as that one-time revenue dwindled down, and there's been a little bit of this is a very little bit still kind of coming through, it's made the income statement always look kind of poor because revenue is typically declining on a gross basis, even though generally speaking, our recurring revenue is really starting to scale up quickly as our operating portfolio grows. So I think that's all true. In terms of other highlights,
sorry.
Oh, go ahead.
That's sort of compared to last year. Like you had that revenue last year, and this year, I think there's still a little bit of or none of it. So you're just seeing a big drop off. But in a sense, that was all expected.
Oh, 100% expected. Yeah. And like from our perspective, if we could snap our fingers and it be gone today, we would. It's just been a little bit of loose ends that fortunately or unfortunately bring in some revenue as we do. So that's, I think Q1 of 23 still had somewhat meaningful aspects. So I think our Q1 next year will still have that comparable in there. But all in all, going forward, it should all be about the recurring revenue.
Gotcha. All right.
Yeah. And so what I was also about to say was that, I think that two other aspects to touch on. One is on the overhead side of things. We had done quite a bit of work over the prior 2 years, building out, scaling up the team. This was the first quarter in quite some time where we saw that level off and actually decline a little bit from the Q2 of 23. So at this point in time, we're feeling pretty good about having the team, the structure in place, really, really good quality team that we built here over time. And so it's really a matter of executing. And then the last point I'll mention, and I think this speaks to some frustrations in the market too, frankly, is on the project timeline perspective. It wasn't too active of a quarter for hitting key milestones, those main milestones being our NTPs and our CODs, in essence, when development is complete and then the project itself is complete. So it was a bit of a quieter quarter then. We also put out guidance around, or in the past, we put out guidance around the timeline of when our backlog of projects will be built. We've been going through an operational update, largely based on that team that we built out and new and capabilities and experience on that team to just firm up and better have those timelines going forward. So we thought it was prudent on our perspective to, make sure that we firmed up those guidelines going forward. But, in the short term, I think that there is some frustration with the speed at which our portfolio has scaled up.
And with those delays, is that maybe a function of your growth? You've been growing very fast, and was it more sort of internal issues, or were external, where there's some political or economic or regulatory factors or whatever else impacting it, or maybe a bit of both that caused the slippage in those projects?
Yeah, good question. And I would say it's very much an industry thing. Within the industry, I think that we forecast I'll actually say I think we forecast better than most. And most of our comparables are private. So the industry itself has had a lot of delays. What we're doing though is we're saying, like, we don't want to use that as an excuse. We want to say, hey, how can we work within this landscape to be better on our timelines and then better on how we forecast and talk to those timelines as well. The industry has dealt with things like interconnection is talked about quite a bit, but how quickly utilities will allow us to connect to the grid. And then number two is like on the regulatory side of things, there's been some state programs that were announced quite a long time ago and have been delayed in coming out. Fortunately, they're actually starting to come out, so we're seeing good progress there. And then also on the Inflation Reduction Act, which I've mentioned before is like the biggest bill for the space in the history of any country. The guidance, I don't think anyone expected that we'd be here 16 months later, still waiting for key guidance coming out of the IRA, but that's where we're at. And that's slowed down somewhat some of the ability to take advantage of it. I'd be remiss not to say though, like that guidance is like just very recently we've been applying for this new 20% ITC adder, which without adding any of the other adders would take a 30% ITC to a 50% ITC, and so we're hopeful that we'll be able to be successful in several of our submissions there as well. So good things are happening beneath the surface. I think this is an industry-wide phenomenon, but we want to make sure that we're the top of the industry, and so that's what we're focused on here.
How does the market look in terms of demand? Is there, and I guess ultimately demand is like people wanting to write PPAs where you have long-term offtakes. Basically, are there buyers for the power you generate? How and the U.S. market is so fragmented amongst all the states are different, and then different regions in the states, how those are structured there. So it's hard to talk about the U.S. as a whole, but I think you're largely focused on about 3 regions. Can you give us a little overview on the demand side?
Yeah, the market is really, really strong. And part of the reason I mentioned that and growing, part of the reason I mentioned that is you described like a PPA construct, for example, community solar and the growth of community solar, it's really at the end of the day, if you're a consumer, which we all are consumers of energy, if you're a consumer, we're offering you to get the same electricity you've always had, but we're going to sell you credits from our systems that are going to offset your utility bill. So you get clean energy, and we'll sell you those at a 10% discount to the grid. There's no reason that people wouldn't take that deal, right? And so it's really a matter of like the regulatory side of things and the interconnection side of things allowing us to do those projects. And so from that perspective, it just continues to grow. In the last week here, Michigan passed a 100% clean energy mandate by 2040. And there's a community solar program directly tied to that. And so that's just like another state that we've been eyeing up and have some pipeline in. That's another example of how that's going to happen. New Jersey had a pilot program for a couple of years. Their permanent program just opened up for applications in the last month. We were ready for that. We submitted a number of projects into that program. So the actual market for what we do has been growing really quite considerably. It's really a matter of just, the flywheel as we talk about it, operationally being really tight, being at the front of our industry in terms of these timelines and how we work through these projects. And that's what we're focused on. I know that I would say that the market probably, the market cares about results, and I get it, and that's the way that it should be. But really, I think right now what we're doing is tightening everything up in the platform to be quicker and have the flywheel spinning faster and faster in the years to come here. So I know that in the short term, these delays have been incredibly frustrating for the market and for myself as well, frankly. But at the same time, I think what we're building in terms of that first 100 megawatts operating and thereafter, that market opportunity is only growing. And I think that the economics within those projects is only improving as well.
A year ago or so, I know we did talk in terms of construction and so forth. Are there still supply chain issues? Is that still an issue that that you on a day-to-day basis have to deal with, or is that pretty much settled down?
Settled down, yeah. Good question, because I think over the last 2 quarters, it was the first quarters we worked into our prepared statement about how that had really improved drastically. Like module prices have really come back in terms of price. Polysilicon, one of the main raw materials that go into it, it just hit an all-time low in terms of cost. There was an article in the New York Times in the past week about almost like the IRA being a victim of its own success for manufacturers, and that there was going to be so much supply coming to market. Anyone can remember from Econ 101, we're already seeing that being a really good thing for UGE and other developers in order to get lower cost equipment and put that into our into our project. So a supply chain we're feeling really good about. If it's okay, Mark, I would say like availability of capital, we're also feeling really good about. I
No,
think that like
that was my next
okay,
question. So you got ahead of me there. Go
yeah.
for it. Yeah.
Well, I think you know we put different types of capital into our projects, and so the biggest delta is or the biggest quantum I should say is the construction and term debt we put into our projects, which typically comes from banks, and then also on the tax equity side of things, we of course also raise green bonds as well, but like we've actually I'm a superstitious guy. I'm a goalie in hockey, so that maybe explains it. So I always want to be careful about jinxing myself. But so maybe I'm a little bit too cautious in my words sometimes. But like for financing our projects, we haven't had an issue. We had multiple sources of capital to turn to in that regard, and then we're directly tied to. Reference rates, 5-year treasury, those types of numbers in terms of how we finance those projects. Like 5-year treasury is down over 75 basis points in the last, I think it's been 6 weeks or something like that. So, we see hopefully the pendulum turning there. We're all watching the macroeconomic data, of course, but yeah, no, I think we're feeling pretty good about that side of things too. I will say, in part because of a remark I made on the webinar, I think, as rates increased and so on, I think it paid to be pragmatic. I think it paid for us to be less acquisitive in terms of projects. We had acquired a few projects over the last, I think it's been a year and a half or so. That affects sort of the timeline of our overall portfolio growth and so on. Of course, not acquiring more projects. So we've been pragmatic in that regard. But yeah, I think we're really quite happy with the amount of capital coming into the clean energy transition, and that's already here. So.
And I think with interest rates, especially rising interest rates, once they stabilize, even let's say it's at a higher rate, then it's easier to plan. But if things are sort of fluctuating, that volatility makes it harder to make business decisions at that point. And where you want to step back and say, hey, let's see where this settles out before we put capital and equity and projects on the line. Would that make sense?
Yeah, I think psychologically that change, like for example, these green bonds which we raise about every 3 or 4 months, give or take. I'm looking to my left here because I pulled up the 5-year Treasury, which actually now it's actually down 80 basis points over the last 5, 6 weeks. We launched that green bond about 6 weeks ago, and so you don't always completely choose your timing or get your timing right in that regard. But based on where the market was at that time, that softened the demand for the green bond at that time. We've seen that ebb and flow play out over time. The last
Yeah.
one was a bit light. The one before that oversubscribed. The one before that light. The one before that oversubscribed. So if we're 50-50 on choosing rates, then I guess we're at the median there. But but yeah, I think psychologically, as that shift has happened, we've seen better cost of capital, certainly in terms of those reference rates that we work with banks on, but also anecdotally, I think interest on the green bond hopefully picking up again too.
I don't think you're going to be giving specific guidance on milestones as you're sort of rejigging your internal processes, but can you give us a sense of what to expect over through the remainder of the year and into the new year in terms of I guess the acquisition pipeline sounds like we shouldn't be expecting much there in the near term. Any other sort of directional guidance or outlook or perspective that investors should be incorporating?
Yeah, I said something on the call that might have been a little misconstrued. So to say it again, so this year I will say, like I am actually really proud of how the scaling up is happening. NTPs this year, 19x what they had been on average the 2 years prior. Operating portfolio scaling up close to 3x this year. The scaling up is happening. We had previously put out guidance before that we were falling short of, and we own that, and we understand why there's frustration around that. when we look forward, since we haven't put out the supplemental disclosure file, we haven't put out a specific forecast around that. What I said on the webinar was if you just take the NTPs that we've already hit this year and ones that are coming up and then ones that are kind of imminent or been talked about already, we're talking about that portfolio being at least mid 20s megawatts by the end of 24. As part of this whole process, both operationally and as a public company, we want to make sure that we're exceeding guidance going forward. We want to make sure that we're conservative and so on. We want to make sure that we're focused on the value we're creating in the medium and long term, as opposed to short-term gyrations in the market. And so, from that perspective, I think that's what you can kind of expect is, as a baseline, that's where we're at. But we don't aim for the baseline. We aim for a lot higher than that. And so, to keep watching milestones around additional NTPs, CODs of the projects that are out there, that'll be key.
I think we hit the high notes here. We should wrap things up. Anything you want to drop in before we wrap this up?
No, I think that's good. I appreciate the chance to catch up. As folks know, we're always here for questions and comments and so on. And in good times and bad, we love to hear from you. So if there's anything that folks want more clarity on, don't hesitate to reach out. And we appreciate everyone following along.
Nick, thank you very much for giving us the update. Greatly appreciate it. Have a great day and talk to you again soon.
Thanks, Martin.